Welcome back to the Value Investors Club. I'm your host, Simon Wunderlich. Let's get right into it with VIC Readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have ZIMV, ticker is ZIMVUS. Price at the point of funding is $8.97. This is not a recommendation, not advice. Please do your own diligence before investing into anything. And please leave down in the comments below if you invested, will invest, or have not invested, and why. Description, summary. ZimVie, ZIMVUS is the sixth largest orthopedics company in the world and the fifth largest dental implant producer with 2,700 employees. It was spun off from Zimmer Biomet in February 2022, and the shares have sold off 80% since the first day of trading. The primary culprits were spin-off selling pressure, reduced management guidance in March 2022, and forward sales by Zimmer Biomet, causing the shares to drop off further in September. ZimVie's business is stable. Gross margins are 65%, and net debt EBITDA of 3x is far below the convenient limit of 6x. Covenant limit. Fundamentals are improving as elective surgery activity is recovering from the pandemic. Current EV per sales of 0.75x is far below the peers group 3.3x. Peer group margins are close to 20%, even at 10% operating margin and a peer group 15x EV EBIT multiple. ZimVie will end up on EV of 1.6 billion, a market cap of 1.2 billion, and a value per share of $46 per share. I don't mean to minimize the risk of investing in a leveraged entity, but I consider the risk reward to be favorable at this point. Introduction. I first heard of this idea from the blogger who runs globalstockpicking.com website out of Hong Kong. ZimVie was created through M&A spanning over 3 decades, including EBI in 1988, 3i Langs, Abot Spine, ZFX, Implant Concierge, and 3DME. Today, ZimVie has 2 businesses, spine and dental, with 70% of revenues from the United States and the rest mostly from European markets. Spine. 59% of pre-COVID revenues. Spinal surgery solutions to treat patients with back or neck pain from tumors, deformities, injury, or degenerative disease. Products include implants, surgery instrumentation, biologics, and bone healing tech, which are sold to hospitals and surgical centers. Previously part of Zimmer before its merger with Biomet. Key products include core and complex spinal fusion products that connect 2 or more vertebrae in the spine to improve stability, correct deformity, or reduce pain. ZimVie uses rods, hooks, and plates, cages to achieve this. Low single-digit growth in the segment. Number 2, minimally invasive procedures. Surgeries done through smaller incisions using specialized surgical instruments and imaging technology. Number 3, motion preservation devices. Normal spinal fusion products limit mobility for the patient. Artificial motion preservation discs help to restore and maintain mobility in the spine. Number 5, enabling technologies. Navigation, tech, and robotics to enable precision surgery. One of ZimVie's flagship products is the Tether, which is the only FDA-approved device for anterior vertebrae body tethering to correct progressive idiopathic scoliosis. But growth is faster than motion preservation devices such as ZimVie's Mobi C product or products for minimally invasive procedures. The industry grows in mid-single digits. Innovations such as the Verge navigation system could help achieve higher growth. In the spine segment, ZimVie's agents are independent, whereas it uses direct sales representatives for its overseas business. ZimVie's spine market share has dropped somewhat over the past 5 years, losing to smaller competitors such as Globus and Alphatech. Dental. 41% of pre-COVID revenues. Dental tooth replacements and restoration products for patients missing teeth. ZimVie also sells biomaterials solutions for soft tissue and bone rehabilitation. Previously part of Biomet before its merger with Zimmer. Key products include dental implant solutions, implants, surgical tools, abutments, anything needed to complete implant based tooth replacements. Number two, biomaterials, bone graft substitutes, membranes, and tissue regenerative products to help patients with insufficient bone tissue. The bone tissue is sourced from elsewhere in the patient, allograft, other human donors, animals, or synthetic materials. Number four, digital. Number three, I'm sorry. Number three, digital dentistry, enabling technologies such as intraoral scanners, desktop scanners, 3D printers, CAD and CAM materials, treatment planning software, etc. These technologies help reduce the costs of treatments. The dental implant industry grows in the mid single digits, though faster in the digital dentistry workflow solutions industry, where ZimVie is trying to expand. New products such as the next generation TSX dental implant, the T3 Pro tapered implant, and the Encode Emergence abutments could help speed up growth. 93% of sales agents are direct and the remaining 7% via distributors. In the dental segment, ZimVie is doing well against competitors such as Straumann, Dentsply, Sirona, and Henry Schein. Reasons for the spin-off. According to Zimmer Biomed's management, the rationale behind the spin-off was to enhance management focus and alignment, reduce complexity, and reignite growth for the dental and spine businesses. In practice, it's clear that Zimmer Biomed wants to refocus its own business towards the higher growth core orthopedic business, leaving the slower growth spine and dental businesses in a separate entity. Zimmer Biomed's decision to retain a 20% shareholding in ZIMV was odd. In the Form 10K information statement, Zimmer Biomed stated that it wanted to retain a 20% stake that could be used to accelerate debt reduction. And it also guided that it would sell its shares in ZimVie as soon as possible after the shares became registered 6 months after the spin-off in September 2022, according to SEC Rule 144 on 1st September. Zimmer Biomed entered into a forward sales agreement with investment banks to sell its entire 19.6% stake in ZimVie. From the latest 10Q report, on September 1st, 2022, we entered into a forward exchange agreement and pledge agreement, collectively the forward exchange agreement, with the same financial institution to deliver to them our 5.1 million shares of ZimV common stock in the first quarter of 2023. It is likely that the financial institution has entered into hedging transactions, which may include selling the ZimV shares in the market, in anticipation of receiving the shares in the first quarter of 2023. It's also worth mentioning that 76 million shares have already changed hands since the spinoff, 3x ZimVie's total share count of 26 million shares. So every Zimmer Biomed who received unwanted ZimVie shares through the spinoff has most likely already sold down his or her shares. Management. ZimVie's CEO is Vafa Jamali, who was previously with Medtronic, Covidien, acquired by Medtronic, Cardinal Health, Allegiance Healthcare, Baxter, and Searle. He's been involved with several spin-offs in the past. Jamali received RSUs and stock options, vesting across 4-year periods from the grant date. CFO Richard Heppenstall was previously a CFO of orthopedic bracing company Bragg as well as Orthofix, but this is the first stint as a public company CFO. Zimmer Biomed's former spine and dental business managers have both joined ZimVie, creating continuity for both subsidiaries. Worth mentioning is that Medtronic's previous chief medical officer Richard Kunst is an independent board director, which could presage cooperation with Medtronics in the future. Valuation. ZimVie's industry exposure and product profile suggest underlying growth in the low to mid single digits. Trailing revenues were weak, with a minus 16% year-over-year decrease in spin revenue and minus 4% decrease in dental revenue. But the numbers are distorted by, number one, ZimVie's exits from certain unprofitable markets, hurting revenues but presumably benefiting operating profit. Number two, cost pricing pressure for spine products, and those are already easing. Number three, a transition agreement with Zimmer Biomet, whereby operating profits are passed through rather than accounted as revenue. Such operating profits will again be accounted as revenue after the transition agreement ends, sometime before March 2025. Total segment EBIT pre-COVID was about 130 million US dollars, but the entity is also incurring SBC of about $30 million for $100 million net, implying a full recovery EV/EBIT of around 7x versus around 15x for the peer group, which would imply an intrinsic value for ZIMV of $37 per share. Sell side is expecting well below 100 million for the next calendar year. While reported numbers differ from those of the sell side in their treatment of intangibles, these are non recurring expenses and do not accurately represent any depreciation in the underlying business value in my mind. The real upside in ZimVie's margin, with a peer group OPM closer to 20% and 28% for Zimmer's Biomed's own, through arguably higher quality business. In the Form 10 disclosure, ZimVie stated that post spin-off it would focus on cost savings initiatives to improve the company's margins. As an independent company, we intend to focus on delivering operating efficiencies through cost saving initiatives in order to improve our margins. At a 15% operating margin, we could be looking at a private market value of around 15x 150 million US dollars in operating profit. 2.3 billion EV, close to 1 million per employee, and intrinsic value per share close to $70 per share. Management has not given guidance of where margins are likely to end up, but with 65% gross margin, ZimVie has room to maneuver. The bottom line is that ZimVie's EV per sales of 0.75x is out of line versus the peer group, and ZimVie's probable path towards higher operating margins. The peer group trades at 3.6x EV sales, and previous transactions in the industry, such as DPUI Synthes, were done closer to 5x EV per sales. Further, it's clear that some of the selling pressure in 2Q 2022 was related to technicals related to spin-off. And the selling pressure since August 2022 was most likely due to investment banks selling shares received through Zimmer Biomed's forward sales of its 20% stake. We're now close to the end of that selling pressure, explaining ZimVie's current low valuation. Risks. The Term A loans coupon is based on the SOFR interbank rate plus a spread, which means that interest expense will vary with short-term interest rates. Today, ZimVie has a net debt of 434 million versus EBITDA of 140 to 150 million for a multiple of around 3x with a credit facility covenant ceiling of 6x. Interest expense of 31 million per year is equivalent to an EBITDA coverage ratio of 4.7x, which seems adequate to me. The Term A loan facility trades at around 95 cents on the dollar, suggesting that creditors are comfortable with the current capital structure. Other risks include potential declines in reimbursement levels in its key market of the United States. ZimVie does not have a robotic offering in spine, which has been a key source of growth for competitors and the primary reason why it has lost market share in the segment. Some goodwill left in the dental segment, which could be subject to write-downs. US dollar strength, supply chain headwinds brought down gross margins until 2021, but those pressures seem to be easing. For more information, check out ZimVie's investor deck and the spin-off Form 10 information statement. And feel free to reach out to me via @Fritz844 on Twitter if you want to contact me directly. Catalyst, the return of elective surgeries post-COVID. Spin-off, Zimmer Biomed selling pressure easing. Transition agreement with Zimmer Biomed ending, improving revenue growth optics. JV or any other type of partnership with Medtronics. Thank you very much for tuning in. See you next